Hello, it's Mary Lou Nowak with Resource, the number 4, CARE. Resource for CARE is an organization that invites professionals that are experts in their field of study, and they educate us on different topics to make navigating aging and caregiving so that we can do that well or do it better. And today I have Joe Garner, and Joe is a licensed mortgage loan officer. And our topic is understanding options for the life you want in retirement. So as we age, our needs change.
Yes.
Sometimes we might have more family visiting us, grandchildren or whatever, and other times we have health issues that make renovations are needed. And then, of course, downsizing. That's the one most people are familiar with.
Going back to the life of the simple.
Exactly. So it doesn't mean less, it just means a life that fits your retirement.
That's right. Well, you know, Mary Lou, do you know what you call somebody who is happy when it's Monday?
A retiree.
Yes.
That's my guess.
Yeah,
we didn't talk about it ahead of time, but I guess.
Yeah, you did it. You got it.
Exactly. It doesn't matter what day. It's always the same, right?
That's right.
What day of the week. So I invited Joe to come today because she's an expert in how to make your money work for you when it comes to your assets and your home, which is usually the biggest asset or biggest investment you have. Is that true?
That is, most of the time, that is true.
Right.
That is true.
Right. So what are some of the options that maybe we're not as aware of or we need to be aware of to leverage our resources?
That's an excellent question, Mary Lou. And there are so many different flavors and scenarios. When people call me, I'm a mortgage officer, so when people call me, it's usually they're trying to make their life better and trying to figure out which way to the right financing that's going to help produce that result.
Sure, right.
And I want to cover, if we've got time today, I'd like to cover about 4 or 5 different common types of financing that people use in the scenarios that make that particular loan the best result for them.
Wonderful. Go ahead and share.
But I want to share with you one of my Hall of Fame clients. It's not her real name, but I call her Betty Burkhoff and her little dog Barkley. And
is the dog's name changed to protect the dog too?
The dog's name is changed to protect the dog. How did you guess? Always protect the privacy of your client.
Yes.
But this lady, I call her Betty Burkhoff, and many years ago, before the Great Recession, she was married, happily married, and living the life she and her husband wanted to live.
Wonderful.
Suddenly, without any warning, her husband passed away. She was thrown into a world totally foreign to her because her husband had taken care of all the finances and never shared anything with her. He did have a small life insurance policy, but it didn't cover the payoff of the mortgage.
Wow.
It only covered enough to give her a little bit of time to readjust her spending and her expenditures very, very austerely. You know, she had to go to a simpler life, if you will. Okay. She's still doing okay. But then the Great Recession hit. She lost her job. She found another job, but it was only part-time. And she was really struggling.
Right.
And the reason she called me several years ago, she said, Joe, and it was just coming into winter, okay? She called me and said, my heat went out. Joe, I don't have the money to fix it. It's cold in here. She said, I don't know what to do, but I listened to you on the radio, and I know people said you could help me. All right, well, she needed a cash-out refinance, but Mary Lou, it was going to take 2 to 3 weeks to get that done, and it was cold outside.
She would be a human popsicle by then.
For her, she went ahead and took the very high interest rate loan from the contractor so she could get her heat fixed today.
Right.
We did a cash-out refinance for this lady, closed about 3 weeks later.
Okay.
Paid off her old mortgage, paid off the high interest rate contractor loan, and added in some of her high interest rate credit cards.
Okay, so she consolidated her debt.
Saved several $100s a month.
Wonderful.
Now that's a common scenario for some people who call me. It worked great for her.
Sure.
Fast forward, same lady, now she's taking care of a family member. She called me several years later, this is recently, and said, Joe, I'm in trouble again. I hope you can help me. She said, the other loan worked for me great, but now I'm taking care of a family member, And I've had some medical expenses and some other things that piled up, and I am looking at bankruptcy. And I
Oh,
just
my
can't
goodness.
stand it. And this lady was not a quitter, okay? She was like, I'm going to find a way. If there is a way, I'm going to find it. For her, because she was older now, much older now, well over
Sure.
62, she was going to live in the house forever. She had a lot of, still had a lot of equity in the house.
Okay. She hadn't used it all.
Yeah, she hadn't used it all at all. She had a lot of equity in there. For her, the government-backed reverse mortgage,
Okay.
what we did with that was just so beautiful. Sometimes it brings tears to my eyes. I mean, she was struggling so hard, Mary Lou, trying to make all the expenses and all the bills.
Right.
We with this loan, it provided her a way to pay off the mortgage that we had done a few years ago, pay off some of the other bills and some credit cards that had accrued.
Sure, that accrued with the care.
And have no mortgage payment as long as she lived there. So what that was doing for Miss Burkhoff, she went from struggling to pay her bills every month to being able to use almost 100% of her pension income to do what she wants to do with it.
Right.
Buy some groceries, take a vacation,
Right.
do some fun things with her family.
How long does a mortgage like that last? I mean, I know it's different for each case, depending on the equity and the value of the home and so on and so forth. But how does that work on the length end of things? Like how long can someone remain in their home?
Forever.
Okay.
As long as they live in the home. And that, I do want to say this,
Yes.
I'm not a proponent of every reverse mortgage program.
Okay.
Right now, I am pretty excited about the government-backed equity conversion loan. It's like a credit line reverse mortgage, but
Okay.
it's backed by the government. And the reason is because they have made some recent changes that protect the homeowner as well as their family, allowing them to keep title to the house
Okay.
and keep the equity that builds up.
So if the property value goes up after they do that
They keep
loan, they're able to keep that equity.
That's right.
Okay.
The other thing that has really made this a much easier loan for people to have a better life in retirement is now if they move out of the house, see, it's still the rule. If you move out of the house, it's no longer your primary residence.
It triggers
the
yeah.
payback. Somebody's
Yeah.
got to pay it back. You got
Sure.
to sell the house or pay the mortgage off.
Right.
But now you have, if you're out of the house for 6 months, you can file for 2 3-month extensions, which extends that out to a year. So if you had to go into rehab or something, it's
Right.
not automatically going to trigger that unless
Or
you
if you
go
had to
move back.
go and care for a loved one for an extended period or something.
Just
Okay.
file those extensions. But once a year, once it's a year, then you do trigger it. But a year is a long time.
Sure, a lot can happen in a year. Well, that's interesting. Now, how is that different than ones that are not backed by the government?
I'm not
What
really
what,
able to.
what should seniors be wary of with the other ones? We don't have to go into detail, but I don't understand the significance of it being government
Right.
backed is what I'm asking.
It depends on the borrower's specific situation.
Okay.
And you can go HUD.gov, you can find reverse mortgage counselors that can talk
Right.
to you about your
The
situation
details, right?
and tell you the difference between the
Okay.
two.
Okay.
In fact, I don't even do a full official loan application until
Right.
they've completed that counseling to
Okay.
make sure that the reverse mortgage would be, in fact, work for them and not something. that
Okay,
wouldn't.
that's an interesting process. All right. Wonderful. Now, can you put people in touch with or refer them to HUD
Yes.
for that information if they reach out to you?
Absolutely. We
Okay.
do it all the time.
Excellent. Okay.
But the reverse mortgage, the cash out refinance, I used Miss Burkhoff's story
Sure.
to kind of
Yeah.
give you an example.
Well, I think it's a testimonial to you too that she's continued to come back to you.
She's not a quitter. She told me that in the very
Well,
beginning.
well, she's she can be not a quitter, but I like that she's come back to you and used it more than once.
Oh, absolutely. Well, and here's some more common questions that people ask.
Sure.
Should I stay in my home? Should I remodel it? Should I downsize?
Right.
Which you mentioned earlier, Mary Lou. Or should I move closer to family? Or should I move in with family?
Right.
Here's another question. Will my current home fit my lifestyle today, 5 years from now, 10 years from now? am I house rich or am I cash flow tight?
Right.
And we look at that. Can my home equity help me improve my quality of life? I just want to say this about home equities. They're quick, they're easy.
Yes.
A lot of times, if you're just got a quick repair and you have the money to pay off the equity line, if the rate went up too high, that's a great way to go. If you are concerned about the fact you can't pay it off right away, you don't have the funds to pay it off, that is a variable rate loan most of the time.
Okay.
And it can be called by the bank. So be careful with the home equity line for that reason. But sometimes it's a perfect deal.
Yeah. Well, we've had a number of professionals on our podcast that talked about, choosing the right home situation, whether it's an assisted living, independent living, staying in your home, or just downsizing. And, one of the pieces of advice they gave is that don't be too quick to sell.
Right.
Pull out the equity, because, once you sell, it's a finite dollar amount that you have. And with, independent living and assisted living being anywhere from $3,500 to $6,000 a month, if you take what you sold the house for, divide that, by your monthly amount, you're going to run out of funds pretty quickly.
I am so glad you mentioned that, Mary Lou. I know for my own situation with our mom,
right?
She needed long-term. We ended up, for her, we got a tiny house next to my sister's, and it was a wonderful situation, but she owned her own home free and clear. And I told my sister, I said, listen, we're looking at we need a long-term solution. We don't need to take a short-term route to handle a long-term solution. So what we ended up doing, we rented her house out.
Yes.
And her tenants, and her tenants' money helped fund her tiny house living at the other place.
Well, often if you lived in your home for a while, your mortgage payment is on the lower side. So when you do rent it out, you have extra positive cash flow, and plus you're holding on to the asset. And if it goes up in value, there's the opportunities to pull that money out.
That's right. And it also covers assisted living. My mother lived in assisted living for a while. It helped pay for some of that. Okay, so some of the types of loans that I get excited about, sorry, I do. I'm in the mortgage business, and I see how these things help people. I'm like, yay. One of them, I got to tell you the story. So this couple, they were getting ready to retire in a very few years. They weren't old enough to do a reverse mortgage, but they wanted to live out in the country. They wanted to live closer to their kids or grandkids. But they were like, yeah, we can afford the house we want today, but when we retire, we're not going to be able to afford that payment. We don't want to have to pay that high payment.
Right.
So what are we going to do? They didn't have a lot of equity in their old house, but what they did have, they were going to use to put a small amount of money down on a house. Just couldn't find the house out in the country that had the shop and had the deck out back and had everything they wanted to
they were looking for,
their kids. But they found a house. Their agent said, I've got a house, but it's a fixer-upper.
Right.
$60,000 worth of work had to be done. One of them was
it runs up quick. I've done renovations before.
But Joe, we love this house. We love this house, but we don't want to put $60,000 in repairs to a house we don't even own yet. And the mortgage company was like, until all the electrical and the rotted wood and everything is fixed, we're not doing a loan on it. Catch-22.
Right.
How did we get around the catch-22? We did a renovation and repair mortgage.
Okay.
Okay, here's the cool part. They had a contractor come out and estimate, okay, this is what it's going to cost to do the repairs.
Right.
This is what you're going to pay for the house. The realtor said, hey, at the end of the day, if this is all you're going to have to pay for repairs, and you're still going to come out when you close with equity in the house.
Sure. As soon as you do the renovations, the value of the house goes up. Right.
So we did a renovation repair loan. They bought the house. And then they took the repair money on a draw, sort of like a construction loan till it was all done. End of the day, sure enough, they were so proud. They were like, Joe, and now we have instant equity because the house is worth so much more.
Well, and it is a challenge to do. I mean, I've done a lot of renovations over the years, and it is a challenge to do that. But when you have the opportunity to put your own stamp on a place and make the changes that suit you specifically, there's a lot of satisfaction in that as well.
Well, and that was a purchase. Now, some people don't realize, let's go back to the reverse mortgage for a second. I had a client, and I've had men and women. It just so happens today I'm telling a lot of stories about my women clients, but I do have a gentleman I'm working with who's been through a divorce after being married almost 40 years. And
Wow.
reverse mortgage for him, was good. But this other lady, I call her Alva, not her real name. Sweet little lady, she's 80 years old. Mm-hmm. She owned a house in town that was free and clear. It had a lot of maintenance work that had to be done on it. She said, she called me up, I listened to you on the radio, and she said, my little friend lives in this upscale neighborhood, it's a 0 lot line, and she goes, she's moving out of it, Joe, and I want that house. She said, but if I sell my house that I live in now, I'm still not going to have enough cash to pay to purchase the upscale, but I want it so bad because it's low maintenance and I love all the people there that live in that 0 lot line. Well, for her, we looked at a couple things.
Okay.
We looked at, well, if you sell your house, would you be comfortable doing a small mortgage, maybe putting a lot of money down and just having a small mortgage payment, a small mortgage on that house? She says, you know what, I haven't had a mortgage payment in years. And she said, I know I can't have everything I want, Joe, but I don't want to have to pay a mortgage payment now that she says, I'm 80 years old. And I said, well, Miss Alva, how long do you plan on living in the house? Well, at least until I'm 100. At least till I'm 100. I said, oh,
very optimistic.
We're talking long term here. I said, let's look at a reverse mortgage purchase loan for you.
Okay.
So for her, the best way was this same loan I talked about with Miss Burkhoff, only she used hers to buy a home.
Right.
She did put a little money down. Okay, she put some money down, a little bit, but she had no mortgage because she used a reverse mortgage to pay the bulk of that, buying that house.
Right.
And since it was set up on a credit line,
Yes.
she had plenty of the credit line left over year after year to pay the property taxes and the insurance.
Okay.
So again, our goal was keep as much of 100% of her pension income available to her.
Right.
So
for her
she could-
daily life. Yeah.
Daily life, you want to go on a cruise,
Right.
want to do some things with the friends there at the 0 lot line, she can do it.
Okay. Excellent. I just want to take a minute, we're about halfway through a podcast, and recognize one of our sponsors, and that's Sherry Harbor of Harbor Realty. She's actually the broker, so she can make you a deal.
She's really good.
She's excellent, and she's very good at navigating all types of sellers and buyers. So you'll see her information as you watch the video. But Sherry Harbor, Harbor Realtor, is one of my community partners, one of my supporters.
HARBUR.
You are.
Yes,
Yes.
and I've used her. Love her.
Yes, she's
Love her.
wonderful.
Okay, so
What other words of wisdom and nuggets do you have to share with us today?
I would like to give some advice from the mortgage desk about what not to do, how to protect yourself.
Okay.
Because I've heard horror stories. Luckily, none of my clients have actually had to deal with the worst part of it. I have had one customer that lost their house through title theft. It's a real deal, guys.
It's a real thing.
It's a real thing. So right now, if you live in Shelby County, if your house is in Shelby County, you can sign up with our assessor's office and get alerted if any changes happen on your title. Now, here's the thing. You have to put your name into the registration exactly the way it is listed. Spaces, dots, dashes.
Capitalization,
Yes,
everything.
Even misspellings.
Correct.
Put it in exactly the way it is
On
in the
the-
assessor's office.
On the tax assessor office.
Register, put your phone number and your correct email that you're going to check,
Okay. Right.
because it is a real deal. And their title insurance, title insurance protection, there's insurance you can pay, but the
Right.
Shelby County system is free.
Okay.
Another one I'd like to say.
Well, I just like, before you move from that, is that if someone goes after your title, and and at face value, if anybody was looking at the application or the paperwork and it looks like it's not true and it looks like theft, they are not allowed to reach out to anyone other than the people who are applying to handle the title. So you have to register.
Yeah.
No one is going to say, well, this doesn't make sense, and let me reach out to who's listed as the original owner. They can
right.
legally, they can't do that.
Now, there are some things being put together, some apps or some software put together that they have not instituted yet, but they're trying to get it to where they can legally have some fail-safe checks, but that hasn't happened yet. So right now, you as a homeowner, the buck stops with you.
Yes, you have to be aware. Buyer. Well, it's not buyer awareness. It's
So
really
I
owner awareness.
I have had that. I had a customer call me after the fact, and it wasn't a mortgage that I did. In fact, he didn't have a mortgage at all
Right.
on the house that got stolen, and that's a key, because right now the ones that are targeted by thieves are houses that do not have a mortgage and are vacant. And he had moved out because he had gotten married.
Right.
He's in his 80s. He got married.
Wow.
Good for him.
Yay him.
But he moved out, and he
Yes.
did not have that house registered, and it was an ordeal.
And I would think they would go after homes by older folks or homes that have been one owner or a long-time owner, because then the equity would be high.
Right. It's free and clear.
Correct.
They don't have anybody else to deal with.
Yes.
And it's vacant. So they
Yes.
run in there with their fix-up crews, renovation crews, so that then they can take possession, which is another level of possession, and it's very expensive
And
at
put it
that
on
point.
the market. Yeah.
Avoid that, register, and keep watch on what's going on with your property. Okay, I want to say this too, a warning to seniors. I've had another senior that they were buying a house, and we told them, the title company told them, the realtor told them, they signed documents saying, we understand, do not give wiring information on our life savings unless we have called the title company ourselves to a number that we know is the title company, or gone to the title company and given
Right.
them. Okay, y'all. They had worked their whole lives and saved all this money, and they were putting it down on a house. They got so excited at the end that they got a call from somebody. It looked like the phone number from the title company, sounded like the person from the title company, saying, oh, by the way, we had to change where you send your money. Here's the new wiring instructions, but you need to do it right now, because if you don't, it's going to delay your closing. So they did it. They called their bank and said, nope, go to this other
Switch it over to the place. Yeah.
Okay, the next morning, we're at closing, and we're having pictures made, we're taking pictures, everybody's celebrating, and then the attorney says, by the way, when are you going to be wiring your funds? And you could have heard a pin drop.
Yeah, of course.
We've already wired our funds. We don't have your funds. Where did you wire it? Okay, so let me tell you what happened on that. First thing we did was we called the police, and there is a FBI, I've got it in some of my blog posts,
Okay.
I don't know it, but there is a place you have to file with the FBI right now, right then,
Right.
which we did. We called the bank person there didn't know what to do, because he said, I'm not the manager, I don't
Right.
know what to do. We finally went physically to a bank with that same bank company.
Branch. Yeah.
Found a manager who did. Luckily for them, the bank that took the wiring instructions could not read one of the digits.
Oh my gosh.
And it delayed it this long enough. We saved it.
Somebody was looking out for
Saved
them.
it. When you are closing on any transaction, whether it is buying a home or whether it's doing any other kind of investment, you need to call the number yourself that you know is the company that you're going to be sending your wire to them. And do not take anything over the phone or email or text, because AI, artificial intelligence, has made it possible for somebody to sound just like me on the
Right.
phone, or just like Mary Lou or
Right.
somebody else. And you think, oh, I'm talking, that's her.
Right.
But be careful.
Yes. And, if you've ever noticed when you put an application in for a mortgage, or you get a notice about your taxes or whatever. There are people who pay to get lists. So if there's some transaction credit check, for example, or anything that is happening transactionally, there are fraudsters, marketers, legit marketers, but also fraudsters that pay to get notified that you're in the process of doing some type of life event.
On social media even.
Right. So they can find out even though you have not shared it with anyone.
Just a note, and I'm not mentioning any names, but this particular couple that had gotten that call to wire their money somewhere else, they had been all over social media. Hey, we're closing on this day, and this house, here's a picture of it, here's the address, and we're going to have an open house, and we're closing with so-and-so at the title company, and we're so excited. Don't do that.
No. As a matter of fact, I mean, you know, I use social media a lot. I mean, you do too. And you do share things about your life, but I always share them after the fact. I'm never announcing that I'm off on some vacation.
Until you get back, and then we love seeing your pictures.
And I don't, one time you said, oh, and Mary Lou's been on vacation. I'm like, did you record that and put it out? Yes, it was on the radio program.
Sorry.
That's okay. But, you know, those are the kinds of little things that trigger people to look up where you live. Oh, they're going to be on vacation. Or they're buying a house. It happens. It happens. But anyway.
You take fabulous vacations, by the way. You know what? You need to do one of these shows on
travel.
On travel, yeah. 'Cause you know how to do it. Well,
we've got only like 3 more minutes.
3 more minutes.
What do you want in those 3 minutes? What do you want to share with our audience?
I haven't covered all the situations.
I know. I told you that we're going to have you come back.
But whatever it is, even if you want to buy a house and you want a small payment, but you can't sell your house yet, I've got solutions for that are very little known. A lot of mortgage companies don't know it, but I used to work in servicing. I know how to fix that for you, and a lot of other things. But connect with me. I want to hear your story. I'm Joe Garner, jogarner.com. You can call, text me, 901-482-0354. I want to hear your story, not just where you are today, but what you want to accomplish tomorrow. When are you going to retire? What is your budget going to look like? Let me help you find the right mortgage that's going to give you bragging rights. It may be a traditional mortgage. It may be a special program. It might be an outside-of-the-box loan.
Right.
But I can help you, and we can make the process easy.
Yeah, I have one question that came to mind. Sometimes people's priority is to close quickly. Sometimes it's to the rate. But sometimes it's, I don't want to share all my personal information.
We've got loans for that.
Right. So when Joe says share your story, share what's important to you. Because one loan that might be the lowest rate might have the most hurdles that you have to walk through and the most personal information you need to share, right?
We
the
have
government loans, for example. Or
outside of the box loans, asset depletion. If you've got $500,000 in secure, assets that can be liquidated at some point, but $500,000 in investment up to $1 million or more.
Yes.
We don't have to get any income information on some of those loans.
That's right. And if you have a certain amount of assets but you don't have a lot of income, that's a great way to go, because it'll be secured with with the money you have saved. So a lot of seniors professionals find themselves in that situation where they're on a fixed income and they're living off of their savings.
Right.
But they have a chunk of savings that can allow them to get through that process, where a traditional way where they're looking for your salary to be, your mortgage to be a certain percentage of your salary and your debt ratio to be a certain amount. You don't have to worry about any of that.
Hobby farms is another one. You can buy even over 500 acres if you want. I mean,
so there's way too much for us to cover.
Right.
But just know that if you reach out to Joe or you get onto my website and you're viewing this and you want to send me an email, Joe and I see each other every week, at least once, sometimes more often. So we can put you in touch with Joe, or you can ask your question through the email on the website. But Joe, I want to thank you for coming today and
Thank you
sharing
for
just
inviting me.
a few nuggets of what you know. And we'll have you back again.
Thank you, Mary Lou.
You're welcome.